SpaceX just joined the Nasdaq 100 and the stock dropped almost 7%. That is not what investors usually expect. So today, I want to explain why this happened, why it may not be a bearish signal, and why Tesla investors should pay close attention. Hi, this is Ken. When a company is added to the Nasdaq 100, the usual expectation is simple. Index funds and ETFs need to buy the stock. Institutional visibility improves. Liquidity gets better. So, in theory, this should be a positive catalyst. But SpaceX moved in the opposite direction. And to me, that tells us something very important. This was not just about SpaceX. This was about how the market is changing the way it values Elon Musk-related companies. First, let's organize what happened. SpaceX was officially added to the Nasdaq 100. At the same time, the post-IPO quiet period ended, which allowed major Wall Street firms to publish research reports. Normally, that combination would create more attention, more buying pressure, and more confidence. But instead, the stock sold off. So the key question is not, was there bad news? The better question is, was the good news already priced in? This is the first reason behind the drop. The Nasdaq 100 inclusion was not a surprise. Many short-term traders likely bought the stock before the official inclusion date, expecting index-related demand. Then, when the event finally happened, they sold into that demand. In other words, ETFs may have been buying, but other investors were using that liquidity to take profits. This is a classic buy the rumor, sell the news setup. And when expectations are already high, even good news can become a selling event. The second reason is the broader market environment. SpaceX is no longer being viewed only as a rocket company. More investors are starting to see it as an AI infrastructure company. Starlink, global connectivity, data infrastructure, compute capacity, and even future space-based networks all connect SpaceX to the AI theme. That is exciting, but it also creates a problem. When AI-related stocks rise too quickly, they become vulnerable to profit-taking. So, if the market starts reducing exposure to high-growth AI names, SpaceX can get pulled into that move too. Not because the long-term story is broken, but because the valuation already includes a lot of future success. And this brings us to the most important point. The market is no longer asking, is SpaceX an amazing company? Most investors already agree that it is. The market is now asking how much of that amazing future is already reflected in the stock price. That is a very different question. And this is where the real shift is happening. SpaceX is moving from a story-driven stock to an execution-driven stock. In the early stage, investors bought the dream. Starlink, Starship, AI infrastructure, the future space economy. But now, investors want proof. They want numbers. They want margins. They want timelines. They want execution. This is why Wall Street opinions can be so far apart. Some analysts may look at SpaceX mainly as a rocket launch company. Others may value it as a global communications company through Starlink. Some may add the AI infrastructure opportunity. And the most bullish investors may price in Starship and a future space economy. Depending on which framework you use, the fair value can look completely different. So the disagreement is not simply bullish versus bearish. The disagreement is about what SpaceX actually is. And until the market agrees on that framework, volatility will probably remain high. So what should investors watch next? I think there are three major areas. First, AI infrastructure. Contracts and partnerships are important, but they are not enough. The market will want to know if SpaceX can actually secure enough GPUs, build enough data centers, access enough power, and scale this business profitably. This is where the story becomes execution. AI infrastructure could become a massive growth engine, but the market will not reward the idea forever without evidence. Second, Starlink. For me, Starlink is the key near-term foundation of the SpaceX valuation. The questions are simple. Are subscribers still growing? Are margins improving? Is Starlink generating meaningful cash flow? Because unlike Starship, Starlink is already a real business. If Starlink continues to scale profitably, it can support a premium valuation. But if growth slows or profitability disappoints, the market may start to question how much future value should be priced in today. Third, Starship. Starship is the biggest dream inside the SpaceX story, but from an investor's perspective, technical success alone may not be enough. The question is not only, can Starship fly? The real question is, can Starship become a business? Can it lower launch costs? Can it support massive satellite deployment? Can it create new commercial markets? And eventually, can it generate revenue and profit? That is the difference between a technological breakthrough and an investment thesis. And this is where Tesla investors should really pay attention, because Tesla has already been going through the same transition. For years, Tesla was valued as a company that represented the future. Electric vehicles, FSD, Robotaxi, energy, AI, Optimus. But now, the market wants proof. It wants to see real-world FSD progress. It wants Robotaxi deployment, not just promises. It wants energy margins. It wants AI to become earnings. In other words, Tesla is also being judged less on vision and more on execution. And I think SpaceX is entering that same phase now. So I do not see this SpaceX drop as a simple negative signal. I see it as a sign of maturity. The market is starting to treat SpaceX like a serious public company, not just a legendary private story. Nasdaq 100 inclusion was not enough. From here, investors want evidence. Can AI infrastructure scale? Can Starlink grow profitably? Can Starship become commercial? And can all of this eventually show up in revenue, margins, and cash flow? That is what the market is waiting for. As an investor, my view is this. The long-term SpaceX story is still very powerful, but the stock will probably become more sensitive to execution, valuation, and quarterly evidence. And that is very similar to Tesla. The next phase for Elon Musk-related companies will not be driven only by imagination, it will be driven by proof. So my question for you is this. Do you see this SpaceX drop as a buying opportunity, or do you think expectations have already gone too far? Let me know your thoughts in the comments. And if you want daily analysis on Tesla, SpaceX, AI, and the future of technology investing, make sure to subscribe to Life in the Future. Thanks for watching, and let's keep enjoying life in the future. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home, I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.